fantastic to be here. For those of you who were here earlier, welcome again. I'm joined by two of the industry's best and brightest to talk about probably the most talked about, vertical within crypto nowadays, which is stablecoins, right? So everyone here is building a stablecoin, working on some sort of stablecoin rails, wanting to build something within the stablecoin ecosystem, and we have, kind of the stablecoin OG here in Paolo, and hopefully the future of what we like to see in the stablecoin universe in Paul as well. So if we can do a quick introduction, even though you guys don't need any, Paul.
Hello everyone, I'm Paolo Ardoino. I'm the CEO of Tether, the company that created the first stablecoin in 2014. As of today, I think we are celebrating 148 billion in total issued tokens.
Amazing.
I'm Paul. I'm founder of Plasma, which is a blockchain specifically built for stablecoins.
Amazing. And I'm Zaheer Ebtikar. I'm the founder of a firm called Split Capital. We work on as a hedge fund, but within the liquid token space. And I want to kind of dial it back for those of you who know. I mean, Tether's one of the oldest crypto companies, one of the longest lasting with Bitfinex. And so I want to kind of go back to the origin point, right? What compelled you guys to build out this product alongside the exchange?
Well, Tether was born in USDT was born in 2014 in a situation where the cryptocurrency ecosystem was very different than what is today. There were just a bunch of exchanges, probably less than 10. There was Bitfinex, there was Bitstamp, there was BTCC, there was Kraken and Coinbase.
Yeah,
Mt. Gox was almost dead, on the brink of death in 2013. And so, but that moment, the volatility of Bitcoin across the different exchanges was very high, and the spread was very high. You had some times that in 2013 was also the first time that Bitcoin rose above $1,000, and sometimes on the exchanges you could see the price of $1,000. On another exchange at the same time you could see $1,200, and another exchange $900. Right? So the obvious thing was for any trader was trying to capitalize the spread, right? You sell Bitcoin on exchange where the price is higher, and you buy back on the exchange where the price is lower. You just have to move Bitcoin from one exchange to another and dollars from on the opposite direction, right? But moving Bitcoins from one exchange to another was very easy. 10 minutes. One block is done. Moving dollars from one exchange to another, especially because every single exchange was international to each other, was very slow. It could take up to 5 days, and all the market makers could not wait for 5 days in order to capture market volatility. And so we created, I think, the easiest thing after sliced bread, that is actually a dollar on a blockchain. And from 2014, for the first 2 years, no one understood the importance of this technology. No exchange was actually, apart Bitfinex, was really excited to use it. And then 2016, the first exchange that started adopting USDT was Poloniex, that started to list all the trading pairs against USDT. And that started to allow a huge arbitrage opportunity and a very efficient arbitrage opportunity between Bitfinex and Poloniex. And then 2017 was the year Binance was born, was the ICO boom. And so every single exchange in 2017 started to use USDT as the main trading pair. And then up to 2020, that maintained the cryptocurrency trading was the main value proposition of USDT. But then in 2020, with the pandemic, people started to use USDT as their digital dollar in all the emerging markets, developing countries. We have more than 420 million users now across the world, especially in the developing countries. 37% of them are using USDT as a savings tool. So over time, the usage of USDT changed from pure crypto trading to more digital dollar payments, remittances, you name it.
Right, and that's a great segue, because that was my next question, right? Did you ever foresee kind of going down this rabbit hole of starting off as kind of offsetting trader balances between exchanges to now serving a very vital role as almost this broad-based, dollar expansion for foreign countries?
I think that in 2014, if you were asking me what would have been the size of USDT in 10 years, I would have said, thinking very, very in a nice and positive way, I would have thought 1 billion. And on a really more realistic way, I would have said $100 million. So, of course, we exceeded that. But there is this almost unfortunate realization. The success of stablecoins, especially USDT, since it's focusing so much in emerging markets, is directly proportional to the success of really bad monetary policies from nations and countries, right? So the more economies get rotten, the more stablecoins and especially USDT have adoption. It's kind of a sad thought in a certain sense, but at the same time, we get. Thankfully, there is USDT because it's creating a lifeline for all the people living in those countries. So that is, I think, the most exciting thing and the most exciting outcome that we could see in 11 years.
100%. And Paul, when we talk about building a purpose-built chain for stablecoins, what does that look like? Why did you build this product? How did you think about this?
I think the underlying thesis is very much, I think, the use cases that stablecoins get used for are kind of undergoing some massive transformation, right? Where at the beginning it was like very, very exchange, collateral, how do we do more efficient arbing between different venues? And I think that's kind of very much where it started. But it's massively outgrown that, obviously, right? But like all of a sudden you have like an export dollar product, right? That kind of really meaningfully, like you say, you have 420 million people who like use USDT.
Right.
And it's a lifeline in so many countries to have good, liquid, trustworthy access to USD. And I think that also requires rethinking the rails those stablecoins move on to an extent, where you can, as a chain, you can just make very different choices if all you focus on is how can we be the greatest kind of execution environment to move around value and to like move around stablecoins specifically. Because I think that's very much the kind of one massive use case that blockchains have, and that really has kind of found product market fit. And I think the kind of existing tech stack is fantastic at like doing the like crypto native kind of stablecoin money movement. But I think the kind of future use cases of really having like fantastic tokenized USD kind of by far eclipses what we have just in the crypto native side of things.
Right.
And that requires also rethinking some of the kind of tooling underneath and above, like in the payment stack, basically. And I think as a chain, you're like in a very unique position to be opinionated on like what that should look like from like a chain product level, basically. And that gives you a lot of leverage to actually kind of meaningfully drive stablecoin adoption, in my view.
Right. And I guess moving on to another idea, right? I mean, stablecoins are the talk of the town now. Everyone is building something on a stablecoin. I get a DM every day, every week from someone asking about their stablecoin project. A lot of them are good, but it's now deviated from dollars in emerging markets to, how do I build a yield-bearing product? How do I build a, compute product? How do I build, a lot of different functions, trying to fit them into a stablecoin product? How are you guys thinking about this, as a company, as a team, when you're building out, kind of the best product for USD?
Well, I think that definitely everyone and their sisters are building stablecoins now. I was reading that also Bank of America and many European banks want to do stablecoins. I mean, from my point of view, it's quite exciting because first of all, is an acknowledgement of the technology we created. But I believe that after 11 years, not many realize that, they look at stablecoins, they look at how much money Tether is making, and they think, oh, I should get a portion of that. And that makes sense as a business statement. But the reality is that almost all the stablecoins we are seeing are trying to compete on the institutional level. They're trying to become the stablecoin for institutions. They want to become the stablecoin that is used by all the market makers in Wall Street and all the banks. They want to become that layer of stablecoins. While no one of these competitors, or almost no one of these competitors, is actually trying to challenge us where it matters the most, that is the emerging markets in developing countries. Tether built the biggest physical and digital distribution network for the US dollar ever built by humanity. We have hundreds of thousands of touch points, actually millions and millions of touch points, physical touch points on the world.
Right.
Plus we have tens of millions of digital touch points in the world. We have, through our investments, we are not doing everything alone. We have more than 90 portfolio companies. We have boots on the ground. We started, we never tried to leverage institutions as our distribution channel, because with the problem with institution is that they will squeeze you for 1 basis point, right? But our focus is not just trying to be just another dollar that is no different than the banking dollar that has been used for the last 100 years. And honestly, that dollar, that traditional dollar, is keeping out from the financial system 3 billion people. There are 3 billion people in the world that are unbanked because they are too poor of being of interest of the bank. They are not generating enough fees on a yearly basis to be of interest of the bank. They are called non-bankable. It's not their fault. They are just too poor. Of the 420 million users that Tether has today, JP Morgan would touch 4, not 4 million, not 44, just because they are not that wealthy for them. So we are serving a niche, or it's called a niche that is not a niche, is half of the population of the world. And then yet there is the arrogance of calling them a niche from the traditional banking system. So that's why I'm excited to see all the competitors coming in, but unfortunately they are looking at the wrong market. They're all trying to pile up on the market where is easiest entry, but is also highly competitive. It's the United States market, European market.
Right.
As a CEO, I decided to withdraw from the European market from 600 million people. Above $140 billion in the market cap of Tether, we lost $300 million. So nothing, because in Europe, that was our thesis from the beginning. In Europe and in US, you have 15 ways to pay people. Like you have credit cards, debit cards, bank accounts, Zelle, Cash App, you name it. That was the biggest realization. We lost a very tiny market cap, and we are not subject to a regulation that is very dangerous because it requires 60% of reserves in uninsured cash deposits. These are the trade-offs that USDT and Tether are doing to protect the people that are using USDT as a lifeline. And not to say that we love the regulations, we're engaging with US lawmakers, with local lawmakers in the UAE, but we want proper laws and regulations that protect the people that don't have other alternatives. Sorry for the rant.
No, we love the rant, and then we're going to get more of the rant in a second. And Paul, how do you think about this, right? I mean, you're much more on the chain side, so you're getting pitched this all the time, right?
Yeah. I mean, you'll be shocked to hear. I agree. I think that's fully right. I think, especially in the US and in Europe, I mean, everyone is extremely well served from like a banking perspective, right? And so the benefit of like having tokenized cash for like a large financial institution in the US, there's probably some benefit, but I think like really the true kind of massive value unlock is very much in South America and in Africa and in
Turkey.
In Turkey, a massive market, and like in those types of jurisdictions where you don't have like extremely robust banking rails, and then you have, like you say, like a lot of this kind of underbanked population. And I think those are billions of people, right? And like building infrastructure that can kind of scale to that level, obviously, and can kind of really be almost. I think that the way we conceptualize it, I think a lot of the world is kind of going to skip a step in like the financial development cycle, basically. Well, like if you look at the history of like how financial systems developed in the Western world, right? Like you had really, really bad banking, and then you had like functional kind of traditional banking, right. And now it's probably slowly moving towards a kind of more tokenized, more blockchain based system. In a lot of those kind of most interesting jurisdictions, I think the like middle ground of having like a really, really advanced and like mostly well-functioning banking system, I think a lot of those jurisdictions are just going to skip that step entirely and just kind of fully move to stablecoins from basically having only like okay-ish banking. And I think that very much aligns with kind of the ethos of like USD should be easily accessible to everyone, and USDT is kind of the best export dollar, euro dollar kind of product, basically.
100%. I mean, on a personal note, when I first got into crypto, the number one ideal was I'm Afghan by ethnic descent, so it's very, very difficult getting money to Afghanistan, Pakistan, India, these countries, getting physical dollars there. It's a very challenging process. And not only is it just challenging from a logistics perspective, it's expensive, right? You're spending 7%, 8%, almost usury-like rates to get dollars to these countries. And Paolo, to something you kind of touched on earlier, right? That you start off as this, what we like to call a niche, maybe, but it's not a niche market; it's a massive market, half of the world. Now it's interesting that even as an unintended consequence of, targeting the people who are actually unbanked, now every institution is lining up to say we want something in the stablecoin universe. When a few years ago maybe they weren't so interested. Can you talk a bit about what you see as the future for these institutions who kind of want to participate in the stablecoin landscape, and what does that conversation look like?
So I think that there are two types of an institution. The one that wants just to look cool and say, "Oh, we are doing stablecoins," because the majority of the money is already digital, right? So banks are already digital. The beauty of stablecoins in the Western world, in the rich countries, is simply more programmable money. You can do many things in DeFi. I'm not discounting that. That is great.
Right.
It's helping to build additional functionalities around money. I love that. But again, there are institutions that are just thinking that this could be a business done the old way, the traditional way. That will not happen. Again, I think that Tether, with 400 million users in emerging market, is proving that, while financial inclusion is considered the problem of the 21st century, you had NGOs and charities and so many companies that try to raise capital to try to solve financial inclusion. They are nowhere where we are. Like, they are not present in emerging markets, developing countries, or maybe tiny. How is possible that a tiny company, because it's a tiny company with 150 people, could make more for financial inclusion than anyone else? These are the questions that people should ask. And it's not because we are very good at Tether. Like, the reason why we had so much impact is because there was nothing else. So these are the things that really annoy me, and why the institutions are looking at our technology. They should ask themselves where they failed to not be able to deliver what we delivered.
100% aligned. Yeah, that totally checks out. I think from the
Thank you.
And this is personally a clap for me because, again, being able to send money to my family, or extended family in Afghanistan, is such a big thing, and I can't do that outside of Bitcoin and Tether, right? That doesn't exist. Even the competitors that are kind of hovering around don't let people in the global south who actually need dollars to, be able to send that money across. Which is the irony of this whole thing, right? I can use a lot of other stable coins within the American market, European market, but I can't use it where it's actually valuable, right?
Exactly.
So it's kind of circular. And something else I wanted to touch on, and Paul, I'd love to hear about this. What do you see as the kind of next generation, next kind of innovation for stablecoin use cases today, right? So we have kind of targeting the global south. We have the expansion of dollars, but who's the next kind of user of stablecoins? Now that larger firms are kind of getting involved in the space.
Yeah, I think in general, like, stablecoins are just the best way to move value around globally, right? And so I think, like, we're very much at the very early inning of also kind of seeing some of these kind of larger, more institutional use cases actually truly come onto stablecoins, which I think is mostly driven by really everyone has access to it. You have insane network effects, and now you're seeing commodities trades being settled in USDT, right? Which is also something that
There's
Tether is
45 million that was settled on
exactly,
Tether, and that's
because
one product that's going to
Much
expand
more now.
Yeah, there we go.
Yeah.
No, 100%. And I think all of that very kind of the large kind of flows of capital that kind of move around the world. I think a good chunk of that is going to be stablecoin based, obviously, because it is just the superior way to move value around. And I think that's also something that we are quite focused on at Plasma, is to kind of bring more of these moving money from A to B is just kind of the most natural use case for a blockchain, and a stablecoin is the most natural product to use to achieve just that. And so I think there's a large share of basically cross-border commerce is going to be stablecoin based,
Right.
and probably commodities is going to be the most immediate use case of that. But I think you have basically all of the kind of everything you can kind of put onto like global commerce is going to end up touching stablecoins in some capacity is very much our view.
Yeah, I think that was an interesting point that you said, that the nexus of cross-border payments in a lot of countries where they do have dollar problems. Another problem that also exists is that the customs agencies are one of the wealthiest people because they take an insane tax on moving things in between countries. So the corridor between two African countries will have an insane tax rate between money that's being kind of moved around, and with digital dollars, that no longer becomes a problem. And for you, Paolo, I mean, you have your hands in 100 different things at once. But sometimes I'm just concerned. I'm like, we were talking about this backstage, where you're on top of all of the new mints for Tether, and now you're working on AI in a very material way. What do you see as kind of the most interesting, next generation idea for the stablecoin landscape? That Tether.
Please say plasma on this, Paolo.
I think I would expect, first of all, other types of stablecoin. Now everyone is trying to catch up with the dollar stablecoins, but there are also gold-backed stablecoins. We were discussing about how, blockchain should be the settlement layer for new types of stablecoins, and also stablecoins for, let's say, minor national currencies. So
Right.
have global FX, very transparent FX, and more very, very liquid FX, right? So that should move all on chain, because it's, again, it's faster, it's more transparent, allows everyone to participate and to have the same rates, more egalitarian type of approach. So I'm excited about that in the near future.
And how do you weave in, I guess, the AI aspect of this as well within the context of the stablecoin?
I think every single AI agent, there will be trillions in the next 15 years, will use stablecoins to negotiate interaction and incentives among themselves.
Amazing, amazing. I could spend a whole afternoon talking to Paolo, and Paul, and learn about the stablecoin landscape with these guys. But at this point, the event organizers are going to kill me, and I have a panel tomorrow, so hopefully that can't be that mean. Thank you again, guys, so much.
You.